Hi, this is Ken Brownlee with the Brownlee Group, Keller Williams. Just wanted to reach out to you. Thinking about buying or selling a home? Come to us. We have all the answers. Click on our link below and follow us on Facebook, Twitter, and Instagram. But we're here with Todd Deckert with Caliber Home Loans. And today we're going to talk about first-time home buyers, what to look for, what you need, and getting your credit score. Just a few topics that we're going to hit. Todd, thank you so much for being here. I really appreciate it.
Great being here. Look forward to the discussion.
Oh, by all means, you're my go-to guy for this stuff, so thank you for this stuff. Basically, I guess, what's the interest rates doing right now? How are they going?
You know, interest rates have been so stable for the past year, and after the presidency change and the new regime, we got this big kind of spike in February where things started going up and getting a little crazy, but they've settled down a little bit. We're still sitting at awesome low rates. I mean, VA rates are 2.75, FHA rates, similar kind of thing.
Really?
It's great. And conventional rates are probably, you're looking around three and a quarter for people with good credit. So rates are still really, really low.
Well, now you mentioned the FHA,
Right.
VA, conventional, all the loans out there, they all have different interest rates. Why?
Well, government loans, which are what VA and FHA are, they're a different kind of market. So as a result, they have different price structures to them. Without getting too complicated, they have lower rates, and they're typically about a half a point below what conventional rates are.
So what is the best loan for somebody?
You know, it's funny because it's really about the person. I always like to say the best loan is the best loan that meets your needs today. You can be in a situation, really your loan is geared to your credit situation, how much money you have that you can put into buying the house, so how much down payment money is available, and your income and what other debts you have. So that's kind of your world today. So you got to get the best loan, the best terms that fit that situation. And down the road, when your situation changes, that's what refinancing's for, if necessary. You don't want to sit here and refinance all the time, but I tell people, get the best loan that meets your needs today.
Which now you brought up their deposit or money. How
Right.
much does somebody really need? Like, do they need a ton of money, and define what a ton of money is? And like closing cost or money deposit?
Sure.
Can you cover that a little bit?
Yeah. Basically, there are three categories of money that you need when you buy a house. Okay, you need your down payment.
Okay.
You're going to need what they call closing costs, which are just that, all the kind of costs that between the settlement company, some taxes that go to the government, and some other things that are associated with just buying a property. And then you've got what they call prepaids, and that's mostly for people that haven't putting less than 20% down, and most people escrow for paying their taxes and insurance so they don't have to worry about it.
And escrowing is basically what?
That's simply putting money in a savings account, in theory, with your lender. So when you pay your mortgage, you're going to pay your mortgage payment, and then you're going to pay a little bit more. And each month, that money goes into a special account that's just yours. And then when it's time to pay the tax bill, the mortgage company pays it. You don't have to worry about it. You don't have to worry about saving up because you got a big tax bill coming in November. Or your insurance policy, when it renews, when it's time for it to renew, the escrow pays that. So it's just like a little savings account that is paying those bills as they're needed.
I know that, let's just say somebody has a ton of money in their account and they're sitting there. Aren't there programs, though, that are for like first-time home buyers, or are there programs? How can they get in with no money? Because I hear a lot of, now don't get me wrong, as a real estate agent, I'm on one side, you're
Sure.
on the other side. But I hear a lot of people say that they get this free money, or how can you get in a home for free? On my side, I know how to build it in, but on your,
Right.
What do you see?
I tell people nothing's free, first off, but there are resources out there to help people not have to use all of their money. Like I said, I mentioned there were those three categories: down payment, closing cost, and prepaids. There are ways that those can be paid by you, or there are some programs out there that allow those things to be paid with pay a portion of them. All of those and it's a longer discussion for another day, there's a lot of difference to those. But there are ones out there that can pay up to $7,500 towards your closing cost and prepaids. There's some that are geared to the percentage of a loan amount, of the sale price, I should say. So there are a lot of options out there to cover cost. And when a buyer calls, that's part of what we're working through. When we go through the pre-approval process, we want to get a good picture of where they are in the process, where they are from an income, assets, as we say, and credit perspective. Then we go look for programs that can best fit their needs.
Well, you and I work with people in financing and planning and doing budgeting.
Right.
So we're familiar with that. And I always tell people, don't spend all the money in your pocket. Even if you have it,
no.
Talk to the lender, find out what's happening, and budget for this stuff. But you also should have money because, when you do move, you have to have a moving truck. You have to have drapes or shades or power turned on or new appliances or whatever you have to do, right?
Right. Well, and part of moving, especially for a first-time home buyer, one, it's a big experience, right?
Sure.
But you want it to be an enjoyable experience. This is a big deal. You're moving from paying somebody else's mortgage and renting to actually now you're making an investment in your future. And you don't want to leave yourself hamstrung. Okay, I've done this and now I have to eat ramen noodles for the next 2 months to kind of build up my... Exactly. So you become house poor and you want to be able to do the things of buy that piece of furniture that you need and begin to start living that new lifestyle in your new home. So you don't want to be house poor. Use the resources and assets that are out there to help you get the best deal for you and the best situation for your purchase.
Which you brought up a point, somebody that's leasing and somebody that's watching and following us on this stuff. They signed a lease in January.
Right.
When should they talk to you first? And because it's a year lease, so January to January, and their lease is about to run out, when should they talk to you, or when's a good time in that next 12 months?
It depends on the person, but in most cases, what I say, let's talk sooner versus later. Because the mortgage process, there's a lot of info that goes into it, and it's a lot of info that you don't normally look at. You don't normally look at your credit score. You don't look at those kind of things. And if you're not familiar with it, some of those things can be little blemishes that can be erased with a little bit of time or minimized with a little bit of time. Their impact on your credit and impact on more the mortgage itself. So the sooner we can have a discussion and do some preliminary work, we can get you armed so that even if it's 9 months off, we know you're good to go and you have that peace of mind, or we know we've got a little bit of work to do and we have time to do it. The worst thing is waiting till,
45 days.
Right, waiting there and then finding out we've got a surprise. Yeah. It's no fun for anybody.
Well, see, I always plan everything early. My wife gives me a hard time because it took me 2 years to buy a car, right? Because I have to shop.
I remember that experience.
Yeah. So I would almost tell people to start 6 months to 12 months in advance. Me.
Right.
But as in for a loan officer, I don't know. But for me, it was like start early, know your stuff. And then a lot of times they always say, well, what happens if I run my credit? It's going to bring my points down. How many points does it really come down running your credit? And I'm going to add part B to that. And you give them a pre-approval letter. How long is that letter good for?
Okay. Well, when you pull credit, a mortgage inquiry is not like getting a credit card. Okay, the whole reason that they've got this thing where they adjust, they bring your score down when you have inquiries is because those are now new credit lines that they don't have any history on. So if your credit score is really based on how you've used the credit you have, the reason they do that is to say, wait, now you have new credit lines that we don't have any history on, so we need to kind of temper things so that you don't go open up with a bunch more.
Right.
Well, a mortgage is a little bit different. As you know, some people call it, compare it to getting your wisdom teeth out. It's really not that bad, but the point is, it is kind of invasive. You're given a lot of information, and when you go through that process, you want to get it done early, okay? And that's why we say start the process early, but it can sit. Sure. It takes your credit lasts, so the credit report we pull is good for 90 days. Now, even if you're 9 months off, it's good to have that information. The impact on your credit score from that credit pull, now a lot of other things could impact your credit score, but that credit pull is probably, most I've ever seen is like 4 points.
Right.
You know, it's tiny, but there's other things in there that sometimes people associate with that credit pull that would be, yeah, but you have this card over here that has $1,000 limit and you just took you just spent $750 at Best Buy. So you're using a lot of credit there, so that's what makes your score go down. So there's a whole other discussion about credit, but the point is credit scores last for about 90 days. We do it now, and then it ages off quickly, the impact of it, even though it's really small. And then when we get closer, we come in knowing what we had, and then we update when you start about 2 months out, and we refine things and have you ready for your search.
Okay. And then again, for the letter, it's good for
3 months.
3 months.
Yep.
That's 90 days. And the credit, it's
And to update it, by the way, to update it,
Yeah.
all you have to do is nothing on your part. I just need to go pull an updated report.
Okay.
So it's not like it's a bunch of work.
What about the interest rate? You can lock them.
Right.
How long is the lock, or is it going to vary based on?
Generally, you can't lock a loan until you have a property.
Okay.
Okay, so let's take a typical situation where you're buying an existing house. You know, typically that process takes 30 to 45 days. Okay, so, you know, I typically lock loans for 45 days. So you've gone under contract. We've been working together with you through that process. We'll lock the loan, and then it gets us through the closing. So 45 days there. If you're doing builder, it's a little bit different.
Now, what about people? We're in Florida,
Right.
Tampa. Everybody's moving in from California, New York, and everything else. So they're changing jobs. They leave one company to the next. They've been in this job for 6 months.
Right.
How does that work for them?
It really depends on the type of job they have. Okay. There's this misnomer out there I hear all the time that, wow, I can't get a mortgage because I haven't been in my job for a year. Doesn't matter necessarily. It really has to do with the type of job you have. If you're self-employed, get one of those 1099 forms. You know, those can have a little more time requirement. But for most persons, if you work what we call a W-2 job, you know, you work at Target or work for a company, they take your taxes out of your paycheck every paycheck. In those situations, you can be in your job for 30 days and still qualify for a mortgage. It just depends on the past 2-year history, but it's not like you have to be in your current job for a long period of time.
So 6 months is going to be dependent on certain criteria that you can address with them, to a year to 2 years.
It really depends on their situation, but it can be as little as, hey, I transferred here, and I do pre-approvals all the time for people based on their transfer letter.
Okay.
Okay, and so I have their transfer letter, and then by the time we close on the loan, may need a paycheck. We may not have to get a paycheck until the time between you close your loan and your first payment, depending on the situation.
Perfect.
So,
Well, what other topics would you have for a first-time home buyer that I may not have covered?
well, I think one of the big ones is people, they don't understand the difference between renting and buying, okay? And if you're renting, it really is a good idea to contact a lender, contact anybody. I can do a quick analysis to show you, wow, if you were spending the same money on rent, on a mortgage payment, as you are on rent, you would have stopped renting a long time ago. You know, it's that education and facts. You know, first-time home buyers, the whole thing is there's a lot, they're first time. They don't know things. They have to learn.
Sure.
And that's just part of the process. Get the facts as early as you can. Get into the process, get involved, and start getting answers as early as you can so that you feel empowered, you feel in control, and you feel confident in being able to move transition from renting and paying somebody else's mortgage to buying and having something to show for it.
Yeah. Now, I'm a big fan of owning a rental property.
Right.
Big time. And I know sometimes people come to the state and they only want to live here for 6 months or a year or 2 years based on their contract or what process they're doing.
Right.
And it's not for everyone. Sometimes that's the time
Right.
to rent. I totally get it.
Sure.
But I think if you're wired or you're capable or wanting to plan your future, why not buy a house at this extremely low interest rate that you can give them, make it your primary residence,
So true.
and then why can't you move away and then make that a rental if that's what you wanted to do?
You know, you're right. It's not for everybody,
No.
but for the people that it is, it can be a perfect catalyst to, if you're building an investment portfolio. Most people have 401ks. They've got something they're building for retirement.
Right.
Okay. Real estate still is a phenomenal growth engine for that. And if you've got the kind of job, I'm that person that, you know, if life throws you lemons, you make lemonade. Well, if your life is only changing because that's the path you've taken,
Sure.
then adapt to it. You know, there's certain opportunities you're going to have with that kind of experience that others won't.
Yeah.
So if that provides that opportunity that you can go here and get an investment property and build that process, especially if you're relocation, if you work for a company that has relocation programs and things like that, where your moving costs get paid by somebody else and things like that. There are lots of opportunities to begin to build wealth and start early. That's the whole thing about investment is everything. Start early, start and let it build for you. But by that time, if you're moving around, I have one client that ironically is my godchild, and I'm really proud of her. You know, she came out of school and worked as a pharmaceutical rep. Okay, so she started off moving around the country, and she bought a house here, bought a house. The girl is 30 years old, has 3 investment properties, and a portfolio that I would dream of. And I'm really proud of her because
very good.
same situation. Her job gave her the situation of moving around. So she turned that into opportunity, and it's worked well.
Yeah. No, that's fantastic. I wish everyone did that. Not everybody can.
Not everybody can, and not
they don't
everybody's
want
for
to.
that,
And they
right?
don't- right.
You know, but for those that that's a fit for, it can be a really strong growth engine.
It is. Fantastic. Well, thank you so much. Anything, words of wisdom for someone that is looking?
Well, I would say this, you know, everybody asks, is now a good time? Okay, well, when interest rates are lower than they've ever been, okay, so from that perspective, it's a great time. From rent versus buy, always better to have something of your own versus paying somebody else's. Hence, it's a good time. You know, I think one of the biggest things that's going on right now where people are trying to figure out, because the market's just going up, and should I pay for this house or should I buy now or should I buy in 2 months and that kind of thing? And it's really, one of the rare options is if you go into a house, many times when you got so much appreciation going on, you have your return 3, 4, 6 months afterwards because houses are appreciating right now. Same thing. If the market's presenting that opportunity, leverage it. Don't be afraid of it. Embrace it.
Somebody
Make it work
wants
for
to
you.
upsize, right?
Right.
And they want to go from this house to this house, but they said, I don't want to sell now because I can't afford the new house. I'll wait until that comes down. Well, when that comes down, the house you're living in.
What you're going to get for your existing house is going to go down. So, you know, capture what you can and move forward. Don't be afraid to move forward.
Todd, thank you again.
You're
Appreciate
very
it.
welcome. Thank you for the opportunity.
Oh, my pleasure. Thank you. And also follow us on Facebook and YouTube. And we're going to be coming out with a lot more content on investing in homes, buying homes and selling, and what to look for and where you get your best dollar. Like us and subscribe us, and please tell us to all your friends because we really appreciate it. Thanks.